Welcome to the Playbook, where real estate meets strategy, hustle meets results, and every episode gives you a move you can use today. I'm Jeffrey St. Arromand, cast member of Netflix Owning Manhattan and partner of the Trisha Lee team at SERHANT. Let's get into it. So here's the headline. It's spring, officially busy season, but the average home right now is sitting on Zillow for 56 days. That's right, 56 days. And yet some homes are going into contract under 19. That's a 37-day spread between the front of the pack and the stragglers. Now that's the widest we've seen in March in 6 years. Now back in 2022, buyers were throwing offers at literally anything. That gap was just 9 days. Now, buyers have options, and they are picky. Kansas City's the fastest market in the country right now. Homes gone in 5 days. St. Louis, Cincinnati, and Columbus, 6 days. Meanwhile, Miami is taking 53, and Austin, 40 days. So geography matters. But here's what matters more: condition. Turnkey homes sell for over 3% more than expected, while fixer-uppers sell for 14% less. Now that's the widest gap in the data's history, according to Zillow. Now here's the bottom line. The market isn't broken, it's just divided. And if you can operate on both sides of that line, you've got an edge most buyers don't. Mall living is real, and it's selling. Speaking of fixer-uppers, what do you do with a 200-year-old mall that is losing foot traffic? You build apartments in it. No, seriously. The Arcade in Providence, Rhode Island, built in 1828, America's oldest indoor mall, converted its second and third floors into 48 micro apartments. One just listed at $225,000, and it went under contract fast. Now, 265 square feet, full bath, dishwasher, half-size fridge, and tons of storage. And downstairs, a bookstore, a sandwich shop, a hairstylist, everything. Now, of the 48 units, 23 are owner-occupied, 14 are long-term rentals, 11 are short-term. And by the way, there's no cap on Airbnb-style rentals. That's flexibility. Look, this isn't for everyone, but it's a perfect reminder that in a market where buyers are picky about condition, unique sells, affordable sells, and as I always say, story sells. And another unit is coming on the market next month, by the way, so look out for that soon. The rate question that no one is asking. All right, let's zoom out of it, because behind every one of those days on markets numbers is the same elephant in the room: mortgage rates. And we need to talk about what's coming. So Kevin Warsh is all but confirmed to take the Fed chair once Jerome Powell steps down later this month. And for housing, the question isn't just will rates fall, it's whether they'll become predictable. Because right now, they are absolutely not. Now, Warsh is expecting to shrink the Fed's balance sheet, shake up how inflation gets calculated, and pull back on the press briefings, please. Now, the real problem in housing is not rate levels, it's rate uncertainty. The uncertainty has paralyzed buyers and sellers far more than actual rates. Now, here's the interesting flip side, though. A Fed that signals less and acts more predictably could actually unfreeze inventory faster than a half-point rate cut. Think about that. Now let's talk about why Tulsa, Oklahoma might be your next move. We've talked about picking a side in a divided market, about acting when rates are uncertain. So where do you actually go? Let's talk Tulsa. So here's the thing. Tulsa, Oklahoma keeps showing up as a standout. Average home price, just over $217,000. Average rent, just over $1,200,000 a month. Single family homes in the range of $120,000 to $180,000, and rent from about $1,100 to $1,400. So you have a low cost of living, landlord-friendly laws, and a growing tech scene. The Tulsa Remote program brought in thousands of workers and a lighter investor competition than Texas or Tennessee for that matter. The downside, it's Tornado Alley. Insurance and budgeting matter. And this is a cash flow market, not an appreciation play. So don't come here expecting Miami numbers. Investors recommend buying in Midtown, South Tulsa, or Broken Arrow. Avoid North Tulsa unless you know the specific block. Not glamorous, but steady. And in this environment, steady looks pretty good. That's a wrap for this week. It's not just news, that's the play. Be sure to follow the Playbook and subscribe to Estate Media for more real estate news, strategies, and stories that actually matter.